Hey everyone, welcome to the Building a Financial Fortress podcast, helping you increase your financial knowledge. This is episode 15, recorded on April 30th, 2022. This podcast is for entertainment only and is not investing advice. Please do your own research. So we'll start out with a market update this week. We'll get into the Bitcoin news. And then I'm going to do a little segment in this week's episode on Bitcoin versus real estate in the United States. And I'll do a side-by-side comparison, talk about taxation, cash flows, other business risks, and sale and conveyance issues. So with that, we'll take it away. This is the weekly market update that I get from Seeking Alpha. Stocks closed out their worst month in years as investors battled a host of headwinds, including monetary tightening from the Federal Reserve, rising interest rates, worsening inflation, COVID lockdowns in China, and the ongoing war in Ukraine. The Nasdaq fell 13.3% in April, its worst monthly performance since the financial crisis in October 2008. The S&P 500 sank 8.8% for its biggest monthly drop since the onset of the pandemic in March 2020, and the Dow was down 3.9%. The Nasdaq has dropped deeply into bear market territory, now 24% off its high, with tech stocks enduring the worst of the April sell-off. Amazon plunged 14% on Friday in its biggest loss since 2006, after reporting a surprise quarterly loss and issuing weak guidance. Apple tumbled 3.7% after warning supply chain constraints could impact revenues in the current quarter by up to $8 billion. Next week, the Fed is expected to pull the trigger on its first half percentage point rate hike since 2000, and it could begin to reverse its large-scale asset purchases used to stabilize markets during the COVID crisis. So a brutal week in the stock market, and definitely the Fed meeting next week. All eyes will be on that, not only to see what the interest rate increase is going to be, but also what the commentary from the Fed is going to be. Most people are thinking they're going to stay the course and they have to keep raising rates because of persistently high inflation, and nothing's really going to stop them until something breaks, and it could be the stock market. We'll just have to see. Also, the volatility of some of these stocks has been pretty crazy, and so when people complain about Bitcoin being volatile, all you have to do is look at some of these charts for some of these tech stocks that are down 70%, 60%, 50% from their all-time highs, and you just have to shake your head. Okay, moving on to the Bitcoin news. So I have a couple items of FUD, fear, uncertainty, doubt, to share, and I've got some commentary on that, and then a couple more positive pieces that came out this week. So the first one is from CNBC. This was published today, Saturday. Warren Buffett gives his most expansive explanation for why he doesn't believe in Bitcoin. Bitcoin has steadily been gaining acceptance from the traditional finance and investment world in recent years, but Warren Buffett is sticking to his skeptical stance on Bitcoin. He said at the Berkshire Hathaway annual shareholder meeting Saturday that it's not a productive asset and it doesn't produce anything tangible. Despite a shift in public perception about the cryptocurrency, Buffett still won't buy it. Whether it goes up or down in the next year or 5 or 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't produce anything, Buffett said. It's got a magic to it, and people have attached magics to lots of things. Even Bitcoin enthusiasts tend to regard the cryptocurrency as a passive asset that investors buy and hold and hope to see increase in price over a long period. Buffett himself commented that there's nobody that's short on Bitcoin. Everyone's a long-term holder. For more sophisticated crypto investors, some coins offer a way for them to use their crypto productively, either through lending or as collateral, to create additional portfolio benefits. However, they're still young, highly speculative, and haven't broken into the mainstream like Bitcoin. Buffett elaborated on why he doesn't see value in Bitcoin, comparing it to things that generate other types of value. If you said, for a 1% interest in all the farmland in the United States, pay our group $25 billion, I'll write you a check this afternoon, Buffett said. For $25 billion, I now own 1% of the farmland. If you offer me 1% of all the apartment houses in the country and you want another 25 billion, I'll write you a check. It's very simple. Now, if you told me you own all the Bitcoin in the world and you offered it to me for $25, I wouldn't take it because what would I do with it? I'd have to sell it back to you one way or another. It isn't going to do anything. The apartments are going to produce rent and the farms are going to produce food. Investors for years have been puzzled over how to value Bitcoin, in part because of its potential to serve different functions. In Western markets, it has been established as an investment asset, particularly in the past year as rates and inflation have been on the rise. In other markets, people still see enormous potential for its use as digital cash. Assets to have value have to deliver something to somebody, and there's only one currency that's accepted. You can come up with all kinds of things. We can put up Berkshire coins, but in the end, this is money, he said, holding up a $20 bill. And there's no reason in the world why the United States government is going to let Berkshire money replace theirs. Both Buffett and Charlie Munger have made hostile comments toward Bitcoin in the past. Most famously, Buffett said Bitcoin is probably rat poison squared. Munger doubled down on that sentiment Saturday. In my life, I try and avoid things that are stupid and evil and make me look bad in comparison to somebody else. And Bitcoin does all three, Munger said. In the first place, it's stupid because it's still likely to go to zero. It's evil because it undermines the Federal Reserve System. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China. So when you look at this and you take a step back, what are they really saying? On the one hand, it's true. Bitcoin is not a productive asset, but neither is gold, neither is silver. And yes, you can hold up the $20 bill and say that, yes, this is the currency of the United States, and it certainly is. And nothing else is going to replace that. But it's also losing 8.5% of its value this year. And it's programmed to lose value as part of the Federal Reserve System's monetary policy. I mean, their goal is 2%. They're obviously not anywhere near that now, but a dollar today is not going to buy a dollar's worth of goods in 5 or 10 years. So the whole concept of, and again, what these guys don't understand probably because they're just not into technology and they don't, or maybe they do understand it and they're just, rooting for the system that's made them rich. But, um, uh, you know, this is an absolutely scarce asset. It is a savings technology. It's a place to put your money and know that your money is still going to be there. There's a global demand for an asset like this. Um, and whether it becomes the base of the new monetary system in the future or not, it's just as good of a hedge against inflation and a savings technology as gold or silver or platinum. In fact, superior uh, to that, based on its the ability to store it and transfer it easily, and you can self-custody it in large quantities without needing a vault and a Brinks truck, et cetera, et cetera. These are all things that I've talked about before. So the vitriol here just seems to me to be overplayed, and there's a lot more to this than just, oh, it's not like an apartment building or it's not like a farmland. It's it's a threat to the system that made these guys wealthy, to be honest. And so um, it's really kind of disappointing because I've always kind of looked up to uh, Warren Buffett as an investor, and he's a great investor. There's no question about that. But when it comes to technology, I think he's not always on top of his game. So those are my thoughts on that. Then the next one here, some more FUD. World Economic Forum shares a video about changing Bitcoin's code to proof of stake. Um, in recent times, there have been a lot of arguments about the energy consumption used by cryptocurrency miners and how it impacts the global environment. Politicians and regulators have been targeting the mining industry on a regular basis. Additionally, the environmental global campaigning network Greenpeace, with the help of Ripple Labs co-founder Chris Larsen, started a campaign to get Bitcoin's code changed so it will be friendlier to the environment. The web portal cleanupbitcoin.com states, "You've heard Bitcoin fuels the climate crisis, but did you know a software code change could clean it up?" World Economic Forum has shown that it agrees with the Greenpeace campaign Change the Code, Not the Climate. On April 26th, the World Economic Forum tweeted about the possibility of Bitcoin changing to a proof of stake network, the same WEF that has been promoting the Great Reset agenda, shared an accompanying video clip that claims miners could stake their own Bitcoins to verify transactions. A simple basic change in coding could eliminate most of the network's energy demands at a stroke, the video says. WEF's video mentions the Greenpeace-led Change the Code effort and the campaigners who believe the controversial idea is possible. The WEF video and blog post got a lot of criticism from cryptocurrency supporters after it was published. A number of individuals said the Switzerland-based WEF's talking points had faults in the assumptions underpinning the group's entire theory. The authors of this are really confused about basic fundamentals, the co-founder and CEO of Blockstream, Adam Back, said, replying to the WF tweet. Responding to Back's comments, one individual stressed, "Adam, I don't think they're confused. I think they know exactly what the F they are doing. It's a calculated, well-orchestrated attack on Bitcoin." Back noted that either way, the WF's arguments are economically confused, and the statements should be scientifically debunked for that reason. They should be ashamed to say such nonsense so they can at least have a discussion while being coherent, the Blockstream co-founder insisted. In addition to Back's comments, MicroStrategy CEO Michael Saylor had also responded to the WF's tweet and video about Bitcoin changing to POS. "If you remove the energy from anything useful, you can almost eliminate its environmental impact," Saylor said. "This is most common in fantasy novels and computer games. Real planes, trains, automobiles, homes, food, medicine, machines, and money all benefit from energy. So do real people." The creator of the Bitcoin stock-to-flow price model, Plan B, also rubbed the WF's Great Reset agenda into the conversation. Plan B said, "At least this WF attack or misinformation on Bitcoin is consistent with the WF mission." And then he posted a little picture that shows their campaign slogan that "You'll own nothing and be happy." Accompanying Plan B's text was a photo of the controversial WF tweet. "This is how our world could change by 2030. However, the WF tweet has been deleted by the owner of the Twitter account and only exists on archive.org's Wayback Machine. So last week I talked a lot about FUD, and if you listened through the whole episode, thank you, because it was a long one. But obviously the energy FUD has been a big one, and the actual energy usage of Bitcoin on the proof of work protocol is minuscule, and it provides the highest level of security and the highest level of decentralization. When you go to proof of stake, it allows for more centralization of the cryptocurrency, like Ethereum, like a lot of these other ones, and then it can be controlled, just like the fiat currency. So really, cryptocurrencies that are centralized are really no different at all from fiat currencies in that they can be controlled and their supply can be manipulated, and therefore the value of it can be diminished over time. So anyway, it'll be interesting to see how this proceeds. But even if they were to do a quote hard fork of the Bitcoin chain, which has happened before, um, most of the users of Bitcoin would probably stay with the original Bitcoin, just like it did the last couple times, because Bitcoin Cash was a hard fork, and so was Bitcoin SV. And although they have some users, there's just it's not anywhere near the adoption rate of the original Bitcoin. So more to come on that, but there's an awful lot of FUD out there. So seems like people are worried about Bitcoin. That's my takeaway. People in powerful places. Okay, on the positive news side, we have Central. This is from CNBC. This was published on April 28th. This was kind of late breaking news. I think I got it into my Substack last week, but didn't. This popped up after I'd done the podcast last week. But anyway, Central African Republic becomes second country to adopt Bitcoin as legal tender. So the Central African Republic has become the second country in the world to adopt Bitcoin as official currency after El Salvador took the same step last year. Lawmakers in the CAR's parliament voted unanimously to pass a bill legalizing Bitcoin and other cryptocurrencies, according to a statement from the presidency. Bitcoin will be considered legal tender alongside the regional Central African CFA franc. Obed Namsio, Chief of Staff to President Faustin Archange Touadera, called the move a decisive step toward opening up new opportunities for our country, according to Reuters. The CAR is rich in diamonds, gold, and other valuable minerals, but ranks as one of the world's poorest and least developed countries. Roughly 71% of CAR's 5.4 million inhabitants were living below the international poverty line in 2020, according to the World Bank. The country, which is landlocked in the heart of Africa, has been gripped by political instability and violence for years. The big question is who the cryptocurrency ruling is for, David Gerard, an independent author who has followed crypto closely over the years, told CNBC. Internet coverage in the CAR is 11%. Perhaps the government has been told that this will bootstrap payments in the country, but it's not clear how. The move to consider Bitcoin legal tender received praise from the crypto community and was hailed as another step toward mainstream adoption of cryptocurrencies. But it can also be viewed as controversial. There were protests in El Salvador after the country introduced the Bitcoin law, and the country also faced criticism from the International Monetary Fund. The IMF has urged El Salvador to drop Bitcoin as legal tender, flagging concerns over the risks it poses to financial stability and consumer protection. Bitcoin is a notoriously volatile asset, which raises questions about its role as a standard method of payment. It was last trading at around 39,686 Thursday, down 6% in the last 24 hours. The cryptocurrency has lost 42% of its value since its all-time peak, above 68,000 in November. Many Western governments have raised the alarm about the potential use of cryptocurrencies by Russia to evade sanctions amid the country's invasion of Ukraine. CAR is a close ally of Russia, with Russian mercenaries having provided direct assistance to the government, according to the UN. Experts suggest the move could help small countries like the CAR reduce their dependence on the US dollar for global trade. Ransu Salovara, CEO of crypto platform Liquidity, noted that the dollar has been the global oil currency since the 1950s. Oil dependence is a major issue now because of the Ukraine and the SWIFT banking ban, so global unstoppable cryptocurrencies like Bitcoin can really shine, he added. So another country goes for legal tender, which is nothing but good news for Bitcoin adoption as it moves forward. I think, as I mentioned last week in in last week's podcast, El Salvador has actually benefited tremendously from adopting Bitcoin, it seems, in terms of the improvement in its economy, tourism, and the like. Um, so maybe the same thing will happen in the Central African Republic. The next bit of news isn't legal tender, but it's uh, also significant Bitcoin country news. This one here is from Reuters. This was published on April 28th. Panama passes bill to permit use of crypto assets. Lawmakers in Panama's National Assembly on Thursday approved a bill to regulate the use and commercialization of crypto assets in the Central American country renowned as a hub of offshore financial services. The bill opens the door to private and public use of crypto assets and will make it possible for people to pay their taxes with cryptocurrencies. Experts warned it could heighten Panama's reputation as a place lacking financial transparency. The legislation is broader in scope than measures passed by El Salvador, which last year made Bitcoin legal tender, said independent lawmaker and promoter of the bill, Gabriel Silva. We're seeing the emergence of many different types of crypto assets like works of art, he said. That's why we didn't want to limit ourselves only to cryptocurrencies. The bill covers the trading and use of crypto assets, issuance of digital securities, new payment systems, and the tokenization of precious metals. Tokenization is when rights to an asset are converted into digital formats. Under the new legislation, Panamanians may use crypto assets as a means of payment for any civil or commercial operation not prohibited by law in the country. Panama is on the European Union's list of tax havens, and Romain Dromard, chief executive officer at financial investment advisory firm KMB Family Office, said the crypto bill would not help it appear more transparent. Panama was already in a bad position, and these payment methods skip the due diligence processes that international organizations are asking Panama to embrace, he said. The bill, which now passes to President Laurentino Cortizo to be signed, was approved in the Assembly with 38 votes in favor, 2 abstentions, and no votes against. Belisario Castillo Sáenz, chief executive officer of tokenization firm Fëanor Corp., argued that crypto assets could help the unbanked, given that internet penetration is high in Panama, but only 1 in 4 people have bank accounts. The bill could also make banks that have created barriers to using cryptocurrencies more cooperative, said Jose Fabrega of Crypto Spa, a hub for crypto blockchain services. Still, KMB's Dromard said the role banks will play under the new rules is unclear and forecasts that it will take years for traditional institutions to use the assets. In addition, small and medium businesses would not be able to switch to such highly volatile assets, he argued. So again, more good news, I think, from an adoption standpoint here. And I didn't get this from this article, but I did read somewhere that um, Panama will treat the assets as considered offshore. So for purposes of a Panamanian resident, if you're transacting in offshore assets, they're not taxable. So there's definitely some tax benefits associated with this law, even though it's not legal tender. From a tax standpoint, if it's not taxable, then really who cares? Okay, and then the last article I have here to go over on the Bitcoin news roundup this week is this is from Bitcoin.com. This was just updated here recently. Swiss National Bank, buying Bitcoin is not a problem for us. The Swiss National Bank could buy and hold Bitcoin as a reserve currency if the cryptocurrency meets the bank's currency reserves requirements, Chairman Thomas Jordan reportedly said at the central bank's annual general meeting Friday. The Swiss central bank chief was quoted by Reuters as saying, "Buying Bitcoin is not a problem for us. We can do that either directly or can buy investment products which are based on Bitcoin." However, he noted, but from the current perspective, we do not believe Bitcoin meets the requirements of currency reserves. That's why we have until now decided not to have Bitcoin on our balance sheet. Nonetheless, he stressed, we can arrange the technical and operative conditions relatively quickly. when we're convinced we must have Bitcoin in our balance sheet. A growing number of corporations are holding Bitcoin on their balance sheets, while more countries are establishing a framework to make Bitcoin a legal currency. El Salvador adopted Bitcoin as legal tender alongside the US dollar in September last year, and recently the Central African Republic made the crypto an official currency. Meanwhile, an increasing number of people are expecting the US dollar to lose its dominance, fueled by the Russia-Ukraine war. Rich Dad Poor Dad author Robert Kiyosaki, for example, has repeatedly warned about the end of the US dollar. Renowned investor Jim Rogers also warned in March about the end of the US dollar. So this is interesting because one of the theories in Bitcoin is game theory, and the more adoption, the early adopters kind of force the hand of the later adopters. So if you have someone who's adopted Bitcoin, say a company, um, other companies are eventually, as Bitcoin adoption grows, are going to be at a disadvantage, and they're going to end up having to buy in at a higher price. Same thing goes for central banks. Same thing goes for individuals. So it's just interesting that a central bank is even talking about this. That hey, we don't have it now, and we don't think it's appropriate now, but we're ready if we need to. It's just it's just really interesting to hear that, because again, a few years ago, nobody thought a country would adopt it as legal tender, and now we have two. So anyway, it bodes well for adoption, and that is a wrap on the Bitcoin news for the week. So moving on, I thought what would be really interesting and instructive, since I have quite a bit of experience over the years with real estate. If you're interested, I wrote a book on getting started in real estate investing based on some work I did back in the Great Recession. Bought some condos and um, anyway, been a real estate investor for many years. Been a Bitcoin investor not too long. And so I thought it would be good to just kind of do a side-by-side comparison, looking at taxation, cash flows, other business risks, and then sale and conveyance issues. Because, when I went through this, it's really sort of compelling to me that you'd probably rather own Bitcoin than you would real estate. And I'm just going to start with that, and everybody's going to say, well, you're crazy. So let me just go through the thought process. So starting with taxation. So number one is property taxes. So real estate obviously is subject to property taxes. It varies by jurisdiction. Here in California, it's, there's something called Prop 13, so it sort of caps the amount on residential property and commercial property. It caps the amount that your property tax valuation can go up each year at 2%. But then when you sell it, of course, it gets revalued, and then whoever buys it has to pay tax at that rate. But lots of other places in the United States don't have anything like that. So every year the property goes up in value, your property tax increases, more and more and more. And I don't know what the percentages are in other states, but here it's anywhere from 1.5% to 2%, depending on what other property taxes you have in your area besides just the base tax. But it's pretty significant. So real estate has property taxes, Bitcoin does not. So that to me is a significant differentiator. Now, depreciation. So for real estate, you can write off the cost of the building. So you have to, when you buy it, you have to allocate the cost between building and land. You can't depreciate land, but you can depreciate the building. And for residential real estate, it's 27 and a half years. And so what that does, you're able to deduct that against your income your net income from the property. So you take the rent minus your operating costs. You can subtract depreciation, and that can reduce or maybe even eliminate any taxable income. So, so that's great. There's no such concept like that in Bitcoin. However, when you sell the property, there's something called depreciation recapture, which means that a portion of your gain gets taxed at a higher rate than, and it can even approach your ordinary income tax rate, to the extent that you've depreciated the property. So you get a benefit while you own the asset, but then they kind of claw it back a little bit at the end when you sell. Um, Both assets would be subject to the net investment income tax, which is currently 3.8%. That's courtesy of Obamacare. It was something I remember writing about it when it was first being proposed, and I was very opposed to it. It got enacted anyway because it was a way for them to fund Obamacare. But it would apply to any net income or net, gains from sale. So it would apply equally to Bitcoin or real estate. Um, Both Bitcoin and real estate are going to be subject to capital gains taxes. So if you own it for more than a year, you'll, depending on your income level, pay 15% or 20% for long-term gains. And then for short-term gains, which are less than a year, you'll pay at your ordinary income tax rate, which could go all the way up to 37%. So there's really no differentiation there. And the only other thing worth mentioning, and I did cover this in a couple podcasts ago, is 1031 exchanges. You can defer taxes by doing a 1031 exchange, when you sell a real property and then put the money into a qualified intermediary and then use those proceeds to buy another property, you can defer paying taxes. You will pay the taxes eventually, when ultimately at the end when you sell the property, um, unless the property passes to your heirs and then it gets stepped up. So there's really no similar concept for Bitcoin. But I do think that the property taxes is a pretty important differentiating factor. And then in almost all the other cases, except, and even with depreciation, I mean, it's kind of like you get the deduction now and you get the tax benefit now, but when you sell the property later, unless you do a 1031 exchange, you sort of have to pay it back. So by and large, most of the taxation is very similar between Bitcoin and real estate. Like I said, the big differentiator in my mind is property taxes and the 1031 exchange. Um, when you look at cash flows, very similar. Can they generate cash flow yield? Real estate, yes. Your rent minus your operating costs. As long as it's positive, you're getting positive cash flow. For Bitcoin, if you are willing to take that risk, you can loan it to someone and they will pay you a yield on it. Now, a lot of hardcore Bitcoiners say, why would you do that? You might earn 2%, but not your keys, not your coins, et cetera, et cetera. So hopefully there will be ways in the future where you can retain ownership of your Bitcoin and still be able to lend it out. But I'm not sure how that would actually work, because you're basically lending the Bitcoin to somebody to use, and then at the end of the lending term, they give you your Bitcoin back, and during the term they pay you in Bitcoin at whatever the yield is. So, but the point is that you can generate yield from Bitcoin. Also, you can use real estate for a loan collateral and Bitcoin for loan collateral. Now, the loan to value ratios might be different. I think, like, if you have investment property, you might be able to borrow 75%, maybe even 80%. um, to actually acquire the property. But I don't know what the loan to value ratios are on Bitcoin, but you know, you probably wouldn't want to borrow that much against your Bitcoin anyway, just in case if the price dropped, you wouldn't want to lose your coins. You know, if the loan got called. Um, but the point again is that can you borrow against those assets? Yes. So I think from a cash flow standpoint, um, both are, pretty similar. Now, when you talk about other business risks, they're both regulated as property, so they have similar qualities in that respect. Physical location risk. So this is fire, flood, disaster, riots, etc. You don't have that with Bitcoin because it doesn't. It's in cyberspace, but you do with real estate. You definitely have physical location risk, so that's a pretty significant one. Security. So how does security work? For Bitcoin, you have a digital key. For a piece of real property, you have a physical key. So, but obviously, security is important in both cases. Um, but you can maintain control and security over your Bitcoin, using a hardware wallet, and you can do it in the comfort of your home. It's a lot harder for you to physically secure your rental property. I mean, yeah, you can have a key, but you can't really stop people from breaking in or whatever. Of course, nobody's going to steal your house, but anyway, um, so there's that concept of security. Then we kind of move into tenant leasing vacancy risk. So this is, you gotta rent the property. Um, you have to collect the rent. Hopefully they pay. Maybe they move out, then you have to find someone else, and then you don't have any rent coming in. So you don't have that with Bitcoin. You definitely have that with rental property. Maintenance and repair costs, toilets leaking, water damage, water heaters failing and needing to be replaced, um, you know, appliances failing and needing to be replaced, electricians, I mean, you name it. You get all of that with real estate, and you don't have that issue with Bitcoin at all. And then property and liability insurance. Obviously you have property liability exposure, which is why you need insurance. So if somebody slips and falls, they hurt themselves on your property, they can sue you. So that's why you have to have insurance, or if there's a disaster and the place gets destroyed, you have to have insurance for that too. You don't need that for Bitcoin. So when I look at on balance at business risks, it's definitely massively tilted towards Bitcoin is really having lower, business risks. Um, yeah, much simpler, easier asset to sort of own and manage, if you will, compared to real property, which is, much more complex, I guess, and risky. And then, so that to me is a big one. So again, you go back to the taxes are, more or less the same. There's, some advantage to Bitcoin on property taxes, but then there's some advantage to real estate as it relates to the 1031 exchange and the ability to defer those capital gains taxes, and maybe some short-term benefits of depreciation until they come at you when you sell. Cash flows are very similar, but business risks are definitely stilted towards the real property and away from Bitcoin. So Bitcoin doesn't really have those types of risks. And then when you get into sale and conveyance issues, so ease of transfer to another party, if you look at Bitcoin, it's very simple and instant. You just enter the address that you're sending the Bitcoin to, and then 10 minutes later, it's confirmed. Versus when you sell your property, you have to hire a real estate agent, you have to market it, you have to get it into escrow, you have to, you know, the buyer has to get a loan, they have to go through inspections, it's 30 days, maybe 45 or longer, uh, by the time from, the time you go into escrow till when you close. Um, so it's very complex and a very lengthy process to dispose of a piece of real property, but it's quite simple and easy and fast to do it with Bitcoin. Um, does the transfer require a third party like escrow? For Bitcoin, no, because it's peer to peer. But for real estate, yes. And not only does it require a third party escrow, it requires lots of other third parties. I mean, you need to have a termite inspection here, at least in California. So you have to have a company come and do that. You have to have a home inspector come and do a home inspection. The buyer usually wants that. You've got real estate agents on both sides of the transaction. You've got the title company that issues the title policy. Sometimes there's lawyers involved that have to look at things if there's a trust involved or whatever. So and then of course there's the lender who's going to be loaning the money for the buyer, and they're going to have all kinds of fees. They're going to have, so there's just all these, an appraiser, et cetera. So there's a lot of cost and a lot of third parties involved. And that's the last thing, is really just the cost to sell, transfer the property is really very low for Bitcoin and very high for real estate. So when I go through this thought exercise of Bitcoin versus real estate, it's kind of funny, but I really conclude that, Bitcoin is probably a better investment than real estate, especially if you can generate some yield off of it, if you're willing to take that risk. But even if not, you can always borrow out if you need cash flow from your asset. You can always borrow against it, and because it's absolutely scarce. And as adoption, like I talked about earlier, continues to grow throughout the world over the next, 5, 10, 15, 20 years, you kind of expect the price is going to continue to trend upward. It's probably going to be very volatile between here and there, but so there should be plenty of asset value to borrow against should you need, to get cash. Um, but yeah, so I just thought it was a very interesting thought exercise. So hopefully you enjoyed that, and I will probably I have like a graphic, so I'll probably put this into my Substack, and that'll be kind of the topic of the Substack this week. So if you want to check that out. All right. So thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. And also don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com. And you can follow me on Twitter. My handle is at Nick Reichert, NickReichert. And I will talk to you all next week. Bye bye.